Choppy trading ends with major averages moving higher. Hello, everyone, and welcome to the daily market comment for Tuesday, April 29th, 2025. I'm your host, Dr. BJ Love, and I'll be bringing you today's broadcast. Here at See Your Profits Thrive, we use time-tested methods and indicators that helps us to navigate these markets with confidence, certainty, and calmness. The major averages nudge higher again in choppy trading today, fueled by trade optimism. An opening jump in equities was faded, but investors stormed in and bought the dip on positive comments from Treasury Secretary Scott Bessent and Commerce Secretary Howard Lutnick on deals with India and Japan. The Dow Jones Industrial Average was higher for a sixth straight session as it gained 300 points and settled at 40,528. The S&P 500 added 32 points and closed at 5,561. The Nasdaq tacked on 95 points, finishing at 17,461. Breath, the heartbeat of the market, was positive. The VIX fell by 0.98 or 1 point and closed at 24. As we reiterate on each broadcast, that the VIX is also called, aka the fear gauge, and there is a threshold of about 20. When the VIX is above 20, the markets tend to be more choppy, tend to be more volatile, and the market tends to move in the opposite direction, or the inverse direction of the VIX. When the VIX is below 20, the markets are more calm and steady and tend to move higher in opposite in the downward movement of the VIX. Crude oil prices fell $1.73 and closed at $60 a barrel. Gold prices dipped $19 and finished at $3,328.40 an ounce, while Bitcoin closed the session at 95,360. Okay, now let's dive right into the chart so we can evaluate and monitor with our premier background color-coded charts, our long-term charts, our weekly charts. Helps us to determine the state of the market currently and where it may be projected to go in the next 30 days. So I'm going to go ahead and maximize these markets. You see, we have four of the major indices that we cover: the S&P 500, the Dow Jones Industrial Average, the Nasdaq Composite, the heavy tech Nasdaq Composite, and then also the small cap Russell 2000. So we're going to maximize these charts and analyze them one by one. Here we see that the S&P 500 over the past few weeks have been falling. We did have a very strong bounce in the week of 4/7, and then we fell again here in the week of 4/14, and now having a very strong bounce this week. However, we are still in the red. If you've been with us for a while, you know if the background is red, it indicates that there is a long-term downtrend. So we're starting to see a little bit of life in the short-term trend, as we will see after we examine these long-term charts. But we are still in a long-term downtrend. We do have still what we consider a death cross, where the 10-week moving average has crossed below the 40-week moving average, and the prices below these falling moving averages. In the background, our proprietary software that we have in the Thinkorswim chart has given us a indication that this is a long-term downtrend for the Nasdaq Composite that we're looking at right now. Also, we do have confirming indicators here. This is our MACD, and it has fallen and is still in a negative momentum state. Now, moving on to the Russell 2000, you can see a similar pattern. We do have that death cross configuration, price below falling moving averages. the 10-week moving average is crossed below the 40-week moving average, and that 40-week moving average is pointing down. We do have our MACD momentum indicator still in a negative state. Moving on to the S&P 500, you can see that it looks a little bit better than the first two that we saw. However, the fact remains that the price is the price is below falling moving average. We have a red background. Now, we must admit that we did have about 2 years of the green background dating back to the week of 4/3 in 2023, and the opposite of what we're looking at now. The background was green, and as you can see that the price remained above these rising moving averages. We came close to flipping over right here in October of 2023. However, it bounced up and has not looked back until we reached a high here in February 17th, 2025, and began to decline from there. That is the S&P 500. Now we're going to look at the Dow Jones Industrial Average. We do see we have recently, in the past 1, 2, 3, 4 weeks, converted from reverse from a major long-term uptrend, and now we are involved in a major long-term downtrend. Always remember, this is the long-term chart, and long-term charts dominate short-term charts, fluctuate. So we're going to move now to our short-term chart, so we can conclude at this moment as we speak, analyzing these charts. All 4 charts are in a long-term downtrend. So we'll wait, watch, and see if the current bounce that is happening over the past 6 sessions over the past week can continue, or will it reach a point of resistance and roll over? We don't know. We just have to wait, watch, and see. So now we're going to look at the daily chart on these same indices. And here we go. We're going to look first at the S&P 500, and here it is. As you can see on the daily chart, it is moving down, 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 down. One rule of thumb that we use here at See Your Profits Thrive, we want to see the long-term chart and the short-term chart moving in the same direction. So, and that gives us confirmation that that trend is very strong, and it is projected to see continuation, even though we have these fluctuations and some of these bounces. What we have here is what I refer to as a bear stack. We use moving averages to determine the price movement of these particular indices, or any stock or any ETF or that you want to measure. It works on all products. So as you can see, it topped out here back in February and began to slide down, 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 down. We've had some sideways movement, but this moving average is a stack. We call it a bull stack or a bear stack. If you have a, let me go back just a little bit. We're on a 3-month scale here. We're going to move it to a 6-month scale so we can show the difference in a bull stack and a bear stack. So you're going to give me 6 months. I'm going to say okay. So you can see now this is a bull stack. This is going all the way back 6 months to November, and we have our moving averages that we like to see. We call it Fibonacci moving average. We have a 21, we have a 34, we have a 55, and a 89, and they are stacked positively. And when the price is above this bull stack, you can see it rise, 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 right? Now, when it begins to penetrate and break through these this positive bull stack, and it slid sideways for a few weeks and then went below and then reversed the entire stack, where you have now the 89 on top of the 55, on top of the 34, and on top of the 21. That is definitely a bearish condition. So right now, the S&P 500 on the short term is bearish, and on the long term is bearish. We're going to look at the Dow Jones Industrial Average here on the short term. Again, using that same terminology that I just explained, prices are below a bear stack where it reversed here, right? When it gave us we also have programmed into our package here arrows that gives us forewarning of what a high probability is to come. So around March the 3rd, 2025, we had a reversal in the market and it fell hard and has begun to recover, but not enough to give us any indication that we're out of the woods yet. These short-term moves have been impressive. 6 days in a row for the Dow Jones Industrial. However, it has not been able to penetrate this bear stack and move above these moving averages to give us this bull stack configuration where the prices have a high probability of moving up when they are above these moving averages. All right, that's the Dow Jones Industrial. Now we're going to look at the Russell 2000. And as you can see, it's in the same configuration. This is a short term. We looked at the long term, it was moving down. Now we see the short term has been moving down. It's starting to move up again, but has not been able to breach these moving averages and move back on top and form a bull stack where prices tend to go higher and higher until they fall down. Last but not least, we're going to look at the NASDAQ composite, and we're going to see same configuration. Remember, short-term time frames like the daily, and sometimes we look at the half a day. We won't do that today. That's for another lesson. Short-term trends fluctuate, as you can see, all the fluctuation going on right here. Now we move back to the long term. You don't see that much fluctuation back and forth until it finally falls hard and it gives us what I call a personality change. This is a picture of the Dow Jones Industrial Average on the long term, and it giving us that red background. Long term long-term time frames dominate and short-term time frames fluctuate. So now we've looked at the general markets. Now we want to see what's working in this particular environment. I'd like to also evaluate the entities that we mentioned in the introduction. Number one was the VIX. Now here's the VIX on the daily, and it rose all the way up to 60. Remember, I mentioned that when that threshold for our analysis purposes is that 20 measure. If it's above 20, you're going to have very high volatility like we've seen since February, especially right here on this date. The volatility was 60, and if we look at the S&P 500 on that particular date, that is on 4/7. That's 4/4. It is 4/7. That's when it hit its low. The VIX hit its high on that date, and the S&P 500 hit its low. So as you can see, these entities move in opposite direction. When the VIX is high, we used to use the rhyme, stocks die. When the VIX is low, below that 20 threshold, stocks will grow. So